All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Appreciate you taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. If you haven't already, make sure to hit that like button if you love these videos. Thanks again for joining me. It means the world to me for your support and actually giving a damn what I have to say, right? We know there's a lot of YouTube channels out there, but hopefully this can be your favorite one. And also subscribe if you haven't already as well, and turn on that bell notification so you don't miss any of our videos. We got some great ones coming up soon. I'm working on a lot of different things. I know what you guys like now. You guys like deep explanations. You like guys like deep diving. You guys like your questions answered live. Very, very important. So that's my thing. Be here for you guys, answer your questions. So you guys have been asking a lot of questions on the comments. I love it. Please ask away. Here to help in any way I can. And glad to have you on board. CPI day. CPI number is in. Okay, I'll answer that question. Jared on the market chat on the Discord was asking me a question about options exercising. So I answered that question there. So we had our CPI number. Let's go ahead and go over the numbers in terms of where futures are and stuff like that. Round the horn we go. Dow Jones futures up 223 points. NASDAQ up 155 points, which is about 1%. S&P 500 45.17, up 0.72%. The Russell up 0.85% at 1954. The dollar index down 0.48%, 102. No surprise, stocks are up with that. VIX is down 5.58%, 1507 currently. 10-year Treasury yields pulling back with that CPI number 3.972. Crude oil pulling back as well, down 0.34%, even with a weaker dollar. That's interesting. We have an OPEC meeting today. There was some meeting notes. We went ahead and posted that on Twitter. If it's not on the blog, I'll make sure to add some extra color to that data and information. Gasoline futures down 0.70%, $2.90. 1959 on gold, up 0.45% as we still flirt with that 2000 level. Silver futures up 0.61% at 22.87. $3.81 for copper, up 0.91%. Let's go to Forex land. Euro dollar up 65 pips. Kevin caught euro dollar yesterday. Well done to Kevin. 143.80. We're pretty much flat in dollar yen. Pound dollar up 54 pips. 127.75. 29,630 for Bitcoin. We were above 30, I believe, just a couple of days ago or yesterday. Again, nothing has changed. 1862 on Ethereum. Good morning, everybody. Okay, so let's go ahead and get started with the CPI number. We're going to go to our live market blog and break it down. And here we are, core CPI. This is month over month, 0.2%. That met expectations on a year-over-year basis. Core, stripping out fuel and auto, fuel and gas mostly. 4.7%. That's a beat of 4.8% on a year-over-year basis. Here's the one we wanted to see. The headline number. That's the one that has everything included. 0.2% on a month over month basis. That met expectations. And the year over year didn't get that 2 handle. 3.2% is still better than the 3.3%, which I thought was a little high. That's a high expectation. 3.2, 3.1 sounds about right. I was kind of crossing my fingers for a 2 handle, but we didn't get it. In terms of price changes over last year's CPI report, transportation costs are up 9%. Shelters up 7.7%. Food away from home up 7.1%. Food at home up 3.6%. New car prices up 3.5% from last year. Overall CPI, again, year-over-year basis, we're at 3.2%. Now we start taking a look at what has slid in terms of pricing. Electricity is only up 3% year-over-year. Medical care down about 1.5%. Used cars tanking in price. Again, that's a big deal in terms of CPI for the coming months. We may have some hopefully deflation, but disinflation. That's what we want. We don't want the used car prices to fall too fast. That's a bad sign of demand. So again, that's down 5.6%. Gas and utilities down 13.7% from last year. Gasoline, I know everyone's all about fuel prices, as we should. It's important to look at in terms of a trader, oil traders like me. Down 19.9%, nearly 20% over last year. So if gas was a dollar, or say we say for every dollar spent on gasoline, you're only spending 80 cents based on a year-over-year basis. And again, I know that Hawaii, California, and certain states have some crazy gas prices. Some here in Florida too, certain pockets, but those are the averages. Fuel oil down 26.5%. Again, mostly probably natural gas that got cratered, but it is bouncing back. Okay, so what does this mean with the CPI really in general? It met expectations, and I think that's the price action you're getting today. In terms of what I see, I mean, we're still in a downtrend on S&P 500. You still got to get above 45.60 for us to get any way bullish here. And I still think we pull back a little bit for this great of a CPI. Apparently, I think it just met expectations. If we were at a two-handle, 2.9% CPI year headline, yeah, I would say we're going to get to 45.60, no problem. But we're not we didn't exactly get there either. We don't have a Fed reaction as of yet of the CPI number. So again, kind of difficult to decipher what they're thinking. Remember, there is no meeting this month, no FMC. All we have is Jackson Hole, and then that's in Wyoming, where Powell will speak about monetary policy in about 2 weeks from now. That's really the only hint we'll have regarding September's rate hike. As of right now, traders are not really pricing in a rate hike for September. This is pre-CPI. The bond market is telling the Fed is done with rate hikes. There is a 15% chance of a September rate hike being priced into Fed funds futures. So again, 15% chance that we're going to get 25 basis points in September, with a 21% chance in November. Now, November sounds pretty prudent for another rate hike. I'd have to agree there. The only thing is that I would prefer to see the 10-year Treasury yield pull back. And I think we may have hit that ceiling of 42.06, at least short term. Again, you could see that 43.33 level. This is the 10-year Treasury yield, so 4.33 was the watermark high. This might be it. It's a very similar double top that we may have formed at 42.31. You can see now we're pulling back below 4. Once we break the 20, we have a lot of gaps to fill below, guys. So we may see rates crater a little bit, especially if the Fed pauses. So if you're a TLT or a bond holder and you're trying to lock in rates, this might be the time to do so and get that cash into savings at least for a year, or half a year, whatever the rates you prefer. High yield savings are fine too, but I think that we're going to get a nice pullback in terms of yields, as the bond market is showing you that we're probably pricing in a rate pause, for sure one this time, right? I've been saying that since February, so maybe I'll be right once in a while. With that being said, I think November is the prudent time if we get a raise, because it gets us another 3 CPIs or 2 CPIs under our belt, and then we'll see how earnings and the labor market, really the labor market is what's important. We had a little bit of a tick up in terms of unemployment claims, highest since late June. So again, that's what the Fed wants. They want to see demand diminish with the labor market pulling back. So again, labor costs are the most expensive thing for companies. Healthcare, labor, the benefits. That's a big part of their budget in terms of any kind of company. So when they lose excess people that they don't need, for example, obviously no one wants anyone to lose their job. But again, in order for the economic equilibrium to be achieved, you need supply and demand to be met at a certain point. If everyone is working, demand is going to be up here, and then supply needs to catch up. Luckily, we have supply. Right now, what's in demand is really services, right? Traveling. But again, even airline prices are going down, which is going to help future CPI numbers. But with that being said, just to wrap it up, is that if we get the labor market to show any kind of crack, we start getting a little bit of a tick higher in unemployment rates, especially in an election year, do not be surprised we start cutting rates next year. And that may not be good in the beginning. You may think that'd be great, but markets are going to react downwards in the beginning, and then over time will bounce. So again, that's what I'm thinking in 2024. We're only in the third quarter, but again, starting to work on our thesis as we look into next year, because right now, guys, stocks are pricing next year. They're not pricing 2023 anymore. We already got the latest earnings for basically the first half of the year. That's it. Now we're looking into 2024 earnings. Yes, we had some earnings revisions higher, but not as much as people would expect. People were expecting cratering of earnings. It's mostly just flat but up. So again, the idea here is that, do we see in 2024 at least an uptick in demand? Will we see an uptick in terms of earnings? That remains to be seen, obviously. But again, just for the time being, we're looking at it in the prism of The Fed hasn't made any decisions. We don't know what they're going to do in September. CPI is sending us in the right path. Let's see what Powell has to say in Wyoming. Big monologue. My apologies. Good morning, everybody. Prayers for Hawaii. Absolutely. Read about those wildfires. Prayers for Hawaii. I haven't seen the Red Cross asking for any donations yet. When it comes to those kind of disasters, I personally donate to the Red Cross. So again, guys, let's come together and help our fellow Americans in Hawaii. Obviously, there's tragedies all around the world as well, so I don't want to be inconsiderate to others. But I've always wanted to visit Hawaii. Our hearts are with the Maui people, and hopefully everything works out. It's just terrible to see those pictures online. I didn't want to retweet that stuff on Twitter only for the fact that it's just terrible to see. You know, I don't want to get that for clicks. You know, we're trying to keep it economics. I know. SPY flat on the CPI news. I mean, it is green when it comes to the future side. But let's go and break this down, guys. I mean, what has changed? Technically speaking, really nothing. You can see the 1 hour, 100 week moving, 100 moving average. Guys, I'm sorry. Listen, I'm happy about the CPI number. It's just a crappy tape. It's just a crappy tape where everyone's on vacation, where it's the dog days of August, not tons of liquidity. This is what we're going to get. Just an ice cube melting in the sun, in the August sun. So yes, I do expect us to pull back. Really, guys, until we get to 45.60, you're staying short, really, until you get some gaps to fill on tech. And that's what we got to wait for. For example, Tesla. I told everybody yesterday, if they wanted to close ahead of the actual CPI number, obviously a risk. Some may have closed at break even. I don't know. But I know is that I still expect this fully to break down a little more today, possibly into tomorrow. But again, the question is, does the market cheer the CPI all day? Could we get that initial pop and then sell the news? Definitely a perspective that I see right now. Again, it's very hard to tell people at this very moment or to build demand for stocks after we had such a run up in July, especially in a seasonally weak August where people are probably taking profits and moving on. Back to school is just starting. And again, a lot of traders are family people, so they're probably not sitting at their desk right now, unlike me, who is sitting at his desk. But again, with Tesla, we could possibly have a double bottom here, but the 240 level is definitely in play. I still have those 240 puts. 235 is the level for the gap fill. Microsoft also has a gap to fill as well. I went ahead and showed here. We just need to break down below 320.97, and then we could play the 315. So again, I'm still looking at getting a little more downside action on these names. Let's take a look at the hourly. And again, still holding on to that downward trend, kind of breaking out a little bit above it, but we've tested above the 50 1 hour MA for a while now. It seems to be that 100 MA on Microsoft that's kind of leading the way. If this pops a little higher, we'll revisit, but for the most part, I want to see 340 before I start going on calls on Microsoft or tech. Apple, I even have puts as well. We played it this week. Apple pulling back a little bit. Again, it's up about $1. But look at this price action. Again, really just looking at technicals right now because earnings are done and we're running out of catalyst. Let's be honest. Yes, we're bouncing off that 100-day MA. That could be support right here. We could break it as well. So I'm going to watch this level very carefully. If we start breaking above 182.97, we have a gap to fill to the upside. So maybe we bottom out a little bit, add a little more downside. I can catch my Apple puts and then see if we bounce up and I could play calls too. That'd be a perfect world, wouldn't it? That would be great if I had control that way. Do you think we will still barcode on SPY 445, 455 range? Let's see it. All right, so we're going to take a look here at the daily. The 452 level is what we need to get to. That's your 20-day moving average. So before we make any decisions on what we expect, obviously we have a nice move higher at 448, but 452, that's your 20. And until we break above that, you really can't go long. I wouldn't, unless you're trying to scalp some points, which I wouldn't do anyways. Again, it's still a little bit more room. We're pretty much just hanging around this zone pre-market. So again, yes, these numbers are green. Don't get me wrong. But if we look on a really day basis, just on the week, here we are on Monday. Actually, let me bring up ES. That'll give us a little more of a view. Just see how choppy this has been. Look, on Monday we were here. We're basically, what, 7 points away from Monday's open? Just Flatsville. Just Flatsville. Nothing to do. And that's why we have to be very, very careful. Let me see if I can get this 9 o'clock open, I think 9 o'clock, yes, right here. Yep, look at that. This is where you are, guys. I hate this tape, and there's one thing I really can't stand. I hate being bearish, but I have to be real, and I have to play what I see. You can't have a bias either. You have to see the facts for what they are. This is still a poker game when it comes to trading, and it's very hard in my mind to justify anyone buying here. It's not enough. I need a little more than just, well, we're down. That's not enough yet. Again, only for the fact that it's August and we don't have any catalysts. Bear flags on SPY, lower highs, lower lows, bearish price action. Absolutely. I mean, what more can we say that we haven't said? Here we are just on Monday, on ES, and here where we are now. You're Flatsville. There's nothing to do, and you can see lower highs and lower lows. So again, traders, guard capital traders, you know better when we see futures seeing this kind of headline. Feels good, don't it? Feels good, don't it? Yeah, we're flat. Yeah, I know. Dow up 208 points. And trust me, I love it. Don't get me wrong, but there's nothing broken, nothing to do. You sit on your hands and wait for anything to break. That's your best bet. Let's see. Can you go over the levels to buy calls on Caterpillar, Goldman Sachs, AMD, and Meta? Absolutely. Great question. When it comes to Goldman Sachs, we're going to go to the daily. Really nothing to do until you get above 361. That would be my level, possibly just to keep an eye. But 388 would be the real breakout on Goldman Sachs. Let's go and take a look at Caterpillar. Caterpillar pulling back tough. In order to play calls, you need to get above the highs of 293.88. The only thing you have here is a gap to fill at 265.42. That should fill. The question is when. Let's see here. AMD. AMD, look at that chop all the way in July. Just been an absolute brutal one to trade. And you're still going to have to sit this one out too. Break below 105, we can talk on AMD for puts. Break above 122.50 on calls. Yeah, it's that wide in terms of trading AMD because you're just stuck in that chop zone. Chop zone means you're wasting premiums. You're giving away money to wait. We don't want that. We want to make our money, get in, and get the hell out. ATM machine, right? And then last one is Meta. Meta, where are we at? Below the 20. We do have a gap to fill here at 301. Let's see if we reject 314. Maybe we bounce above it. I don't like the risk reward here of shorting at 308 to get to 300. That's going to cost a little bit. So I don't want to do that. In terms of calls, you got to break the highs. You got to break 326.52 if you want to play calls on Meta. And there's no more gaps to fill. Nope. You have to break above here. This is where you got to go. And then you can target this slight gap fill at 361. And then you all the way to all-time highs at 384. Tough trekking for Meta. Again, kind of hard to sell a company on, I guess, in terms of the stock at this moment when it's up nearly 100-something% for the year. It's hard to chase that right now, and it's best that you don't. A lot of people chase 2021 as well, and it happens. I'm not saying we're going to get an absolute disaster coming soon. It's just hard to justify at this moment in August with no more catalysts. CPI is done, and we got a meeting expectation CPI. Terrific. And we're back to the same level in what was this on Monday? It's hard to really, in a way, kind of pitch that. And again, as traders, all we're trying to do is ride the wave. Right now, I don't see buying wave. I see selling wave. So we're going to ride the selling wave. That's really just it. You just got to play the cards you're dealt. Real wages increasing. Yeah, real wages are important. Again, that's another issue for the Fed. We don't want wages going too high. Obviously, that creates inflation due to more people having money and enjoying life. Can't have that, right? Yes, economic equilibrium has to be this way. It's not a fair system. It's not meant to be. It's just the monetary system, and you're here just to profit from it. That's all I could say in regards to that. Political commentary aside or economic commentary aside, all we're trying to do here, guys, on YouTube is do the best we can to make as much money as we can for you guys. And that's what I'm looking at here. I think we pull back today. I still think we have downward pressure. 15,000 is probably in the cards for NQ. And unless we get above 15.5, I don't see any reason to buy stocks here or any reason to buy calls. That's it. Best I can tell you guys. To go long on SPY, you need to break 452.16 on the daily. Let's see it. Yep, 452.60 will be the confirmation or so. Yep. There's a gap to fill on ES, but let me see if there's one on SPY. I think there's one. I want to say it was because of that downgrade. No. So you need to get above at least 451.76 on SPY or so to even think about playing calls. You're just not there yet. These are fun candles on Sunday, but doesn't mean anything. All right, guys, we'll go and leave it there. Thanks again for joining me. I'm glad that we broke down CPI, broke down the market, and just another dog day of August. We'll be watching. We'll be seeing what's out there. Disney reported earnings, and really the thing that made it stick out, two things: increasing the price of streaming as a customer, not fun, and then of course the dividend being re-implemented. Disney, I like Disney. I own Disney. No issues with Disney, but really what you're looking for now is acquisition. Now the rumors are out there that Apple would buy Disney. Is that a reason to buy Disney? No. Is it a reason to hold Disney? Probably. Probably. That's a difference. I don't want to just buy a stock because I think someone's going to buy them, tomorrow. I mean, obviously that'd be a trade. But to invest in it, you're investing in the company. I still think Disney is fine. But again, there's a lot of bad news baked into it. Right now, anyone who bought calls or puts is pretty much going to get chopped to oblivion for playing earnings. And that's unfortunate. My gut feeling was that I was going to get to 90. I did not trade it, but you could see that it's pulling back a little bit. It's down. It's now at 89.45. It got as high as 92.80. We'll see the price action on Disney, but I still think what I'm seeing from the market, at least at the price action, is that at least what the market is looking at with Disney is that they're going to at least increase prices. So, if the demand's not there, they're just going to increase the price to see if they can milk as much as they can. To me, that just seems kind of that behavior of possible merger and acquisition. I don't know if Apple's made that call. It's a complete rumor. A Hollywood reporter wrote that. I think it was Market Watch that was talking about that too. So it's not completely unfounded. But again, as a holder for Disney, I think it would be a match made in heaven if Apple bought Disney. We will see what happens. But would I buy Disney because of that? No. Would I hold Disney because of that? Probably. Probably. All right, we'll go and leave it there, guys. Have a great rest of your day. We'll see you guys tomorrow. Cheers.